Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories in blockchain development. I'm your host, Solidarity. The blockchain landscape today presents a fascinating confluence of technological innovation, market volatility, and strategic shifts that collectively shape the trajectory of the digital asset ecosystem. One of the most significant developments revolves around the unprecedented movement of Dormant Bitcoin, where over $8 billion worth of long inactive coins suddenly transitioned across the blockchain. This event, occurring precisely at 1 a.m. UTC, has ignited intense speculation within the crypto community. Some analysts suggest it could be a sophisticated test of private keys, particularly after a smaller Bitcoin Cash transaction preceded the main Bitcoin transfers, possibly serving as a low-profile verification step. Others raise concerns about potential cryptographic vulnerabilities, including theoretical quantum decryption threats, though such scenarios remain highly speculative. The absence of interactions with exchange wallets adds layers of mystery, as it implies deliberate efforts to avoid traceability. Market implications could be profound, as large-scale movements of dormant assets often precede increased volatility, potentially triggering cascading sell-offs if stakeholders lose confidence in legacy security models. This incident underscores fundamental questions about wallet security and the resilience of cryptographic systems against evolving threats, which could influence institutional adoption and regulatory scrutiny in the coming months. Parallel to this, the altcoin market endured severe turbulence, with tokens like SOON, and Chess plummeting by 37% in a single hour. This downturn wasn't isolated, as HiFi and OBOL also registered declines, though their exact losses remain unspecified. Market observers attribute this to a combination of structural weaknesses and broader macroeconomic tensions, such as unresolved geopolitical conflicts and profit-taking after a record-setting June. The absence of clear explanations from project teams exacerbates uncertainty, potentially accelerating capital rotation toward more established assets like Bitcoin and Ethereum. Such volatility highlights the inherent risks in decentralized finance, where low-liquidity assets can experience exaggerated swings even without direct external catalysts. Over time, repeated incidents of this nature may push developers toward enhanced stabilization mechanisms, such as algorithmic liquidity pools or circuit breaker protocols, to mitigate panic-driven sell-offs. Meanwhile, July 2025 has emerged as a pivotal month for blockchain ecosystems globally, anchored by high-profile conferences and massive token unlocks. Events like ETHCC8 in Paris and IVS Crypto 2025 in Kyoto gather industry leaders to discuss Ethereum's Layer 2 advancements, Web3 innovations, and regulatory frameworks. These forums aren't merely academic. They serve as launchpads for partnerships and technological showcases that can sway market sentiment. For instance, Vitalik Buterin's anticipated remarks on staking mechanisms at ETHCC8 could validate emerging solutions like restaking, directly influencing investor allocations toward Ethereum-based protocols. Concurrently, scheduled token unlocks exceeding 782 million, including major releases for Trump, 455 million, CIRX, 187 million, and SUI, 154 million, introduce supply-side pressures. Historical precedents, such as Axie Infinity's post-unlock volatility, suggest possible short-term price suppression for affected assets. However, strategic stakeholders might counterbalance this through staggered selling or restaking, turning potential headwinds into opportunities for ecosystem growth. The interplay between these events could redefine capital flows within DeFi, especially as unlocks coincide with institutional-grade conferences that spotlight blockchain utility beyond speculation. Bitcoin itself faces a technical inflection point, trading near $108,000 after rejecting the $110,800 resistance zone. Analysts note consolidating Bollinger Bands and weakening momentum indicators, signaling reduced volatility, but also exhaustion among buyers. The cryptocurrency's ability to hold above $107,200, a level reinforced by an ascending trend line from June's lows, remains critical. Should this support falter, leveraged long positions could face liquidations, worsening downside pressure. Conversely, a breakout above $110,600 might reignite bullish sentiment, particularly with spot Bitcoin ETFs resuming inflows after a brief hiatus. These dynamics occur against a backdrop of rising Bitcoin dominance, now exceeding 65%. which historically precedes altcoin rallies once the metric approaches 70%. This suggests that while Bitcoin stabilizes, capital may soon rotate toward undervalued altcoins, especially those with imminent catalysts like protocol upgrades or mainnet launches. The security landscape also demands attention, as CertiK's mid-year report reveals $2.5 billion in crypto losses during the first half of 2025. While Q2 showed a decline in hacks compared to Q1, persistent vulnerabilities in smart contracts and cross-chain bridges continue to plague the industry. Such losses could incentivize stricter security protocols, including real-time auditing tools and decentralized insurance pools, ultimately strengthening trust in blockchain infrastructure. Simultaneously, the emergence of Bitcoin treasury companies, firms like Metaplanet and 21 accumulating BTC as an inflation hedge, signals deepening institutional integration. Their growth, alongside successful crypto IPOs like Circle's, illustrates how traditional finance frameworks increasingly accommodate digital assets, potentially easing regulatory hurdles and attracting conservative capital. Solana's market position warrants special consideration, with technical analysis pointing to a potential cup and handle pattern targeting $4,390. This optimism stems from accelerating developer activity and fee prioritization upgrades like Jito's tip router. However, Sol must first overcome resistance near $300, requiring sustained network demand to justify such ambitious projections. Should Solana succeed, it could validate similar trajectories for other high-throughput chains like Polygon, whose key OL token migration and aggregate layer v0.2 testnet promise multi-chain interoperability. Polygon's 30% surge in developer activity post-migration exemplifies how technological refinement can directly stimulate ecosystem vitality, a model others may emulate. Globally, crypto adoption diverges from US-centric narratives, with high growth markets in Asia and Africa driving grassroots integration. Countries like Malaysia leverage blockchain weeks to showcase real-world use cases, from remittances to land registries, that address local economic challenges. This organic growth, often divorced from Western regulatory debates, highlights blockchain's utility in emerging economies where traditional finance infrastructure remains underdeveloped. Such trends may compel US policymakers to accelerate regulatory clarity or risk ceding influence in shaping global standards. Finally, the sudden drop in tokens like Pi, -3.81%, and Jito, -3.70%, reflects market sensitivity to tokenomics events. Pi's decline coincides with concerns over its 304.7 million token unlock, while Jito's underperformance persists despite its tip router upgrade. These reactions underscore how even minor supply expansions can outweigh technical improvements in bearish conditions, emphasizing the need for projects to pair unlocks with substantive utility announcements. That concludes today's Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more Spotlights. See you next time.